Today we're talking GameStop.
Yes, we are.
We're looking at their recent financials, the big report that just came out. GameStop reports fourth quarter and fiscal year 2024 results.
From March 25th, 2025.
Exactly.
So fresh off the presses.
And our goal today is basically just to kind of break down, what are the key numbers, what jumps out at us, and what might it mean,
Yeah, exactly. We've got the actual document right here in front of us. So yeah, we're gonna break this down into bite-sized pieces and really highlight what we think is important here for you.
All right, so let's just jump right into it. Let's start with the fourth quarter. The first thing that jumps out to me is the net sales, $1.283 billion.
Okay.
Now, that is down from $1.794 billion in the same period a year before. So that's a significant decrease in sales.
Yeah, no, that's the top line figure, and it's definitely something to note right off the bat. But what I think is interesting is when you look at their expenses, right? So they're selling general and administrative expenses, or SG&A. That's the cost of running the business, day-to-day salaries, rent, all that stuff,
Right.
That actually went down pretty significantly to $282.5 million from $359.2 million. So they've really made an effort to cut costs there.
Yeah, and it seems like it's really had an impact on their profitability.
Yeah.
Because even though those sales were lower, their net income actually shot up to $131.3 million compared to $63.1 million the same quarter a year ago. So that's a huge turnaround in profit.
Yeah, and I think that's a really interesting point, right? Because they're making more profit even though they're selling less. That really suggests that they've gotten a lot more efficient at running their operations. And that's also reflected in their adjusted EBITDA, which increased to $96.5 million from $88 million. So by that measure too, they're showing improvement in terms of profitability.
Yeah, and it's not just about like cutting costs and becoming more efficient, right? They also have a ton of cash on hand. They ended the quarter with $4.775 billion in cash equivalents and marketable securities. I mean, that's a huge amount of financial flexibility.
Oh, yeah, absolutely. And that gives them a lot of options, right, in terms of what they might do in the future. And it's also worth pointing out that they did complete the sale of their Italian business. They wound down operations in Germany.
Right.
So some of those moves, likely contributed to the lower expenses and kind of reshaping their financials a bit.
Yeah, okay. So fourth quarter, kind of a mixed bag. Lower sales, but much more profitable and sitting on a huge pile of cash. Let's zoom out a little bit and look at the full fiscal year 2024. What happened over the entire year?
Sure. So for the full year, the trend of lower sales continued. Net sales were $3.823 billion, down from $5.273 billion in fiscal year 2023.
Okay.
So yeah, across the whole year, significantly lower sales.
All right, and what about those cost-cutting measures?
Yeah.
We saw the big impact in the fourth quarter. Did that play out over the entire year?
It did, yeah. So for the full year, SG&A was $1.13 billion, down from $1.324 billion. So yeah, the focus on reducing costs was definitely a theme throughout the year. And just like in the fourth quarter, this had a really big positive impact on their net income for the full year, which jumped to $131.3 million from just $6.7 million the year before. So yeah, another pretty remarkable turnaround in terms of annual profitability.
Huge swing in profit. Now their adjusted EBITDA for the full year, though, that actually went down, right? It was $36.1 million, down from $64.7 million. So how come, we saw that really strong adjusted EBITDA in Q4, but for the whole year, it actually declined?
Yeah, that's a good question. And I think it likely reflects the kind of the cumulative effect of those lower sales volumes, that we saw throughout the year, even with the cost savings that they implemented.
Okay.
The fourth quarter was strong in terms of adjusted EBITDA, but, the earlier parts of the year maybe weren't as strong. So yeah, it does highlight that, it's tough to maintain kind of overall earnings growth when your top line revenue is shrinking.
Right.
Yeah.
Makes sense. Okay, let's talk about what exactly people are buying at GameStop these days. What does their sales mix look like?
Yeah, so in the fourth quarter, hardware and accessories were the biggest part of their net sales, bringing in $725.8 million, or about 56.6%.
Okay.
Software was next at $286.2 million, making up 22.3%, and then collectibles brought in $270.6 million, or 21.1%.
All right.
Now, if we compare that to the same period last year, we see a bit of a shift. Hardware and accessories were a larger percentage than at 61%. Software was also higher at 26%. And then collectibles were a smaller slice at just 13%.
So it looks like collectibles are becoming a bigger part of their sales, at least in the fourth quarter. Is that the same trend if we look at the entire year?
Yeah, it is. So for the full year, hardware and accessories accounted for $2.0997 billion. Or 54.9% software, $1.054 billion, or 26.3%, and collectibles, $717.9 million, or 18.8%.
Wow.
So again, if we compare that to the full year before, where hardware was 56.8%, software was 28.9%, and collectibles were just 14.3%.
Right. Yeah.
We can definitely see that collectibles are becoming a more important part of GameStop's revenue.
Right. So proportionally selling fewer games and consoles, but more of these collectible items. Interesting. Okay. Now, when we look at this report, we see a lot of mention of these non-GAAP measures, things like adjusted EBITDA.
Right.
What is all that about? Why do companies use these non-GAAP measures?
Yeah. So companies often use these non-GAAP measures to try and present what they consider to be the core performance of their business.
Okay.
So they're basically excluding certain items that they think don't really reflect kind of their ongoing operations.
Right.
And in GameStop's case, some of the adjustments they make include things like costs related to their transformation efforts, impairments on assets, and the impact of those divestitures that we talked about.
Right.
And they actually provide a table in the report that kind of walks through, how they get from their GAAP net income to these adjusted figures.
Yeah, and for both the fourth quarter and the full year, they take that GAAP net income of $131.3 million and adjust it to get to $96.5 million adjusted EBITDA for the quarter, and then $36.1 million for the year.
Right.
So they're essentially taking out things like any interest income they might have earned, depreciation on their assets, income taxes, stock-based compensation for employees.
Yeah.
And then these, kind of specific one-time costs related to transformation and divestitures and things like that to arrive at that adjusted EBITDA number.
Exactly. And it's their way of presenting what they believe is a kind of a clearer picture of their profitability from operations. But I think it's always a good idea, for you, the listener, to look at both the GAAP numbers and the non-GAAP numbers,
right,
to really get a full picture of the financial health of the company.
Absolutely. It's all about context. Right. Okay. Let's talk about cash flow. We saw that they have this huge cash balance at the end of the fourth quarter. Where did all that cash come from over the course of the year?
Yeah, so for the full year, they reported net cash flows from operating activities of $145.7 million, which is a significant improvement compared to negative $203.7 million in the prior year.
Right.
Their free cash flow, which is basically the cash that's left over after covering operating expenses and capital expenditures, also showed a big positive swing, coming in at $129.6 million compared to negative $238.6 million.
Wow. So that's a really significant turnaround in their ability to actually generate cash, from their business operations. It's not just showing profit on paper. They're actually bringing in more cash now.
Yeah, absolutely. And the report actually points out that a major reason for the big increase in their cash equivalents and restricted cash was the proceeds from issuance of shares at the market offerings.
Okay.
Which brought in $3,453.8 million. So yeah, a big chunk of that cash balance came from raising capital by selling more of their stock.
Interesting. Okay, so let's try to wrap this up here. Yeah, for you listening, what are the main takeaways from this deep dive into GameStop's recent financials?
Yeah, so I think we see a company that, while still facing, a decline in overall sales, has really made some progress in boosting profitability, especially in the fourth quarter and for the full year.
Yeah, right.
Their efforts to cut costs have clearly had a positive impact on their net income. We've also seen a pretty noticeable shift in what they're selling, with collectibles becoming a much more important part of their revenue. And then finally, those cash reserves have grown substantially,
right,
largely due to those stock sales. So, while the drop in sales is something to keep an eye on, the improved profitability and strong cash position are, potentially very significant developments.
Absolutely. So this has been our deep dive into GameStop's financials.
Yeah.
Based directly on their report. Now, as you kind of digest all this, think about what these financial trends might suggest about where GameStop is headed and how the market might react to these results.
Yeah, and I think this raises a really interesting question, for you to think about with that substantial cash pile and the changing mix of what they're selling. What strategic paths might GameStop be considering? Are they gearing up for acquisitions, a major change in their business strategy, something else entirely? It's definitely something worth thinking about.
Lots to ponder for sure. And hey, if you found this helpful, we really break down these complex topics in a way that hopefully is easy to understand.
Absolutely.
Make sure you subscribe to the channel, hit that bell icon.
Yeah, help us out.
That's the best way to support our work, and make sure you don't miss any of our future deep dives into the information that matters.
That's right.
Thanks for joining us.
Thanks, everyone.
We'll see you next time.
See ya.